Hi everybody. Today we'll be learning about recording of business transactions. After the learning of this chapters, we should be able to record a transaction using our accounting equation and also using the debit and credit rule. First of all, I think we all need to understand that every business receives money from various sources such as incomes and also the sales from what the products we do, and also we might borrow money from banks and other various sources. All this money which we earn or we borrow gets spent for different purposes such as purchase of goods, payment of expenses, repayment of loans. So basically accounting is a tool that helps an accountant to manage this responsibility dealing with money with utmost care. So let me move on and try to explain each and every aspect of it. So first of all, we need to understand accounting voucher. Accounting voucher is a document which contains an analysis of transaction. It is the basis of recording the transaction in the books of accounts. It is prepared by an accountant and countersigned by authorized person. So this is how it used to be happening in early stages of accounting. Moving on to accounting equation. Accounting equation here is the most important part of accounting. This is followed at every stage of accounting. So this is the basic principle that we need to follow, that every debit in a transaction has an equivalent credit. So the equation stands like this: assets is equal to liabilities plus capital. So to arrive at capital, we will be doing assets minus liabilities. To arrive at the liabilities, we will be doing assets minus capital. So further, if I would need to give you an example, like if at all we would have invested a capital of 10,000, we would be recording on the debit side, which is under the liabilities called as capital. So here we would be recording a 10,000 which is in the balance sheet. So we'll also be reflecting the amount that we would have invested as a capital. It will be reflected in cash so that you can purchase any machinery, whatever the transaction that you would like to do. So we will be having the cash to do the transaction. So it will be recorded on the credit side, which is the asset side of the balance sheet. Moving further, I would want to also kind of take you through the accounting cycle. What happens here? So basically everything starts from a business transaction and then we would do our recording. So recording happens generally when we do purchases book, sales book, purchase returns or sales return. We also record a transaction during a cash transactions through the cash book. We also do it during the bills payable and the receivable. So all this happens through the general proper. After all of this, it gets recorded into the ledger. So ledger is where we do the accounting part of it. Then we will also have to put up a trial balance around it. So then is when we will be able to put up the final accounts, which will be able to know the financial statements of the business. Further to this, I would also little talk about how to utilize the debit and credit. So recording of transaction is beginning of the accounting. It involves the division of transaction into two parts. One is the receiving of benefits of some value, other one is giving the benefits of the equal value. So there is, every transaction can be split up into two, which is receiving the benefits in some value, giving the benefits in equal value. So every transaction affects two accounts. An account takes the shape of English letter T. That means it's been divided into two parts. The left hand side, which you see here, is called as the debit side of the account. So here we record the value that is being received. On the right hand side is called as a credit side. Here we record what is the value given. So here we get to see understanding of what an account is, where debit side is to record the value received, credit side is to record the value given. Moving further, I think it is more to understand kinds of accounting. So basically there are two kinds of accounting that has been derived, which is English system of accounting and American system. Under the English system and American system, there is not much of a difference. It's just the ways of looking at things in a different angle, but end of the day it is almost the same. So here let's talk about English system, which talks about personal accounts. Personal accounts is further categorized into three categories, which is natural persons, which is like any person's name, I would say, like Ram, Rahim, Rudy, anybody's account. It can be as a person's name. That is when we'll record it under a personal account. Artificial account. Artificial accounts are more like a HDFC bank account and Amazon company name account. So it depends on the artificial name that we would have given it for every respective business. So you can talk about the Reliance company account. So anything like a business firm or something like that. So representative persons. So it's generally to most into part of scenario where it's like salary payable, interest receivable. And then we have our impersonal accounts. So in English system it is personal accounts, impersonal accounts, nominal accounts. So in impersonal accounts we have further two categories. One is real accounts. So real accounts is split up into tangible assets and intangible assets. So real asset is nothing but the assets owned by the business. So intangible assets is something which you can touch and feel. It's like our cash account, our machinery that we have, and all those things. So furniture, buildings, all this will come under those. Intangible assets is more like a goodwill, a patent account, all those kind of things. Moving on, there is nominal account. Nominal account is to record all the accounts of expenses, losses, gains and incomes. So moving on to the American system. So American system is also very similar to English system, just that it has been categorized into five, which is asset account, nothing but our real account, where we would capture both our tangible and intangible assets. Capital accounts, or those are for personal and other artificial accounts and all those. Liabilities also to record any kind of liabilities that are to be received or we have to pay around it. Expenses and losses, so it is nothing but a nominal accounts. Again, it has been split up into expenses and losses and incomes and gain. So this is just a broad difference between English system and the American system. Moving on to recording of business transactions, where we need to use a debit and credit rule. How do we use it for a English system and how do we use it for an American system? Generally, both of this basics is the same. It's just that how people want to recognize it and make it convenient for their learning. So first of all, English system. In English system, we have personal accounts. Here, always debit the receiver and we would credit the giver. So in a personal account, we would always first debit the receiver and credit the giver. In personal accounts, debit what comes in and credit what goes out. Nominal accounts. Nominal accounts, here debit the expenses, losses, credit incomes and gains. So if you go back to our account here, this is how it will look like when we start recording our transactions. A personal account, debit the receiver, it is to record the value received. So we will be recording the debit side. Here, credit the giver to record the value given. So this is where we are giving the value of amount. So impersonal account, debit what comes in, again record the value received, debit what comes in, credit what goes out to record the value which is given. Debit expenses and losses, debit, here we would be mentioning it as debit the expenses and credit gains and incomes. Similarly, in an accounting system for American assets, what happens is we would record it as increase in an asset, debit increase in an asset and credit decrease in an asset. So we'll record it on the debit side whenever there is an increase in an asset, and we'll record it on the credit side whenever there is a decrease in an asset. In a capital account, whenever there is a decrease, we'll record it on a debit side, and whenever it is an increase, we record it on a credit side. For liabilities, we debit when it is a decrease in liability and we credit when there is an increase in liability. Further on to expenses and losses, we debit increase in an expense, we credit decrease in an expense. Here, incomes and gains, debit a decrease in an income and credit increase in an income. So these are the basic rules of debit and credit that we need to follow. Thank you everybody. Thank you so much for your time. Have a great day.